Hi, guys. This is the Work Your Money podcast with host Michelle Wong. I'm here back in Philadelphia at a Mike McCann event, and we're doing a sneak peek interview. We're doing a couple of discussions here, and one of my first guests is a husband and wife team, and super excited to have them on. Fischer, Mike Yalowitz, and they're from 123lending.net. So guys, welcome on the show.
Thank you. Thank you for having us.
I'm super excited to get into a little bit of discussion. So tell us a little bit about yourself.
Well, similar to probably everybody watching this, nobody ever told us to go into real estate, but it evolved over the past 30 years based on what we used to be doing. And we've had a number of activities, all of which have contributed to a varied and long-term involvement with real estate. In my case, I built a number of stores and operated them and ultimately owned the real estate for those also. Karen also partnered in that, and she has a long history of speaking to consumers on behalf of Fortune 500 companies, including many companies that were in the real estate business, and she has gained a very detailed understanding of what people want when they live in apartments or they buy homes. So we've, over the past number of years, been long-term holders of real estate, which put us in the position of having the funds to help other people develop their real estate activities. We've flipped some homes from as far as Philadelphia down to Baltimore, and actually renovated down in St. Thomas and the Virgin Islands also. We have renovated commercial buildings, we've renovated apartment buildings, and you know, at this point what we enjoy is working with people to make their businesses successful by using some of the skills and talents that we've acquired and some of the key people from having the problems and some of the mistakes that we've made. And that's where we're at.
And another key part of our background, too, in addition to owning buildings and rehabbing and flipping, we also were mentored and understood how to work out second position non-performing notes. And that was an extremely valuable piece of experience for us. In fact, we were wanting to do more note investing, and by the time we were ready to do it, that we really understood what the process was. The huge hedge funds were coming in and buying up all the notes. So then we realized we could originate our own notes, and we segued into originating mortgage notes.
Yeah, that background really gave us, put us in position to understand how to help people finance their properties, whether their first position notes or whether they're second position notes, and how to help people move in and out of properties through more sophisticated financing.
Well, absolutely, and that's part of the real estate investment sector. I think that those individuals that do not want to have the burden of physically dealing with a property and and also engaging with property management and things like that, having more of in the mortgage note sector, that's the most indirect way of being able to obtain something,
right,
and have that as part of your portfolio. And the other thing too is that you're really the bank, and that person is now paying it out to you.
Exactly.
So you kind of hold everything, you hold the cards in place, and you put the terms together for them. So you really don't have to deal with so much of the headache as to having a physical property.
And quite honestly, I think a lot of it is probably a phase of life. And we started out decades ago purchasing rental properties, and we were fortunate to be able to accumulate some money from our professions and our businesses, and as soon as we had enough money, we would put it down on another building. And then it was a matter of managing it with Michael was really on the front lines with that, and over a couple of decades they pay themselves off. So the bottom line is yes, we're dealing with paper now, but we do have the background in the brick and mortar, and we can understand what lenders go through, whether they're buying and holding, dealing with tenants, or if they're wanting to just simply flip a property as an exit strategy.
Absolutely. And one of the great things about real estate investing overall, there's a full spectrum. So you're not just limited to one aspect of it. There's different ways. There's the fix and flip, you have the wholesale,
Exactly.
you have the mortgage notes, you have tax liens. So there's different areas that you can tap into. It's just what you feel comfortable with.
What's great about that is that you can move in and out of the different sectors depending upon where you are in life, whether it's a question of you have a family to deal with, or it's a question of age, or it's a question of you're wanting to do other things like travel. You can move through the different sectors of the real estate investment world. And I think at this point, what we've been fortunate is to have had that broad spectrum, and we try to help people who borrow from us think ahead and see, well, where do your exit strategy out of property, there's a 1 year time frame, sometimes there's a 3 year, sometimes there's a 10-year time frame, and we help people.
Or 20.
Yeah, or 20, and try to move in and out of those and think not only short term but long term also. So
Absolutely, absolutely. So we have a couple of questions for you in regards to just getting a little bit of a Q&A, get better educated for those listeners that are out there that are trying to get more familiar with hard money and private money. So my first question is, what is the difference between private money and hard money as lenders?
Sure. We are private money lenders, and that's just exactly what it says. We lend our own private money. As opposed to a hard money lender, we'll be lending investors' money and providing a return either on a monthly or quarterly basis. So we deal only with our own funds, and the benefit we feel to the borrower is that when they call us or when they email us, they are talking with the decision maker. We don't have to report or discuss anything with a committee. We make the decisions. So as a result, we can be really responsive. We can act quickly. We can make a decision we've been known to make a decision within a couple of hours when need be. We can be at the closing table within a matter of a few days. And we can also be very open-minded, and we can be flexible. So we're willing to entertain any scenario that the borrower may want to bring to the table. If they want to cross-collateralize, if there's not quite enough equity in their target property and they want to collateralize a second business property, we're willing to listen, and we can even consider second position mortgages as well.
Yeah, that makes us more flexible and able to help people in more unusual circumstances. And there's nobody that we don't have to consult with anybody to do that. We make a decision on the level of risk we want to take with the borrower, and the decision's made right here.
The bottom line is that we try to be as flexible as we can and to work with the borrower.
Well, that's a great advantage. It's not like the traditional bank where you have to wait a long period of time to go through the process and go to be approved, and because the circumstances are different for each person, so it's a case by case. So by having someone that would be able to give an answer very quickly, that's a perk.
Exactly. We don't want a borrower to lose a deal or to have a property run away from them because the lender wasn't able to act quickly enough. We want to be able to be as responsive as we can. And the other thing is that we try to keep things as simple as we can. In fact, we have a very, very simple, basically 3-page application that's at our website, 123lending.net, and it can be simply downloaded, filled out, and as soon as that's completed, we can act very quickly.
Absolutely. Again, it's a great platform. I think that the banks, when they're reviewing specific things, they have to go through certain regulations, and they have to go to the higher up. And the other thing too is that sometimes they don't realize how competitive it is out there for those investors that are looking to purchase a property per se. So by having someone that has a better understanding because they themselves are doing it as well, that's an advantage.
Yes.
Oh, sure. Well, we've suffered all the problems that people who borrow and renovate and flip have suffered. We understand working with contractors. We understand permit processes. At the very outset, we understand valuing the property and trying. What we try to do is to provide a second set of eyes and a second and third brain for somebody, so that they are not limited by their own experience. That we can bring to them some of the decision-making skills that they need to be successful and to lower risk. We're into lowering risk as much as possible. So we will help people with the valuation of the properties. We will help people evaluate their contractors if that's necessary. We'll help them by through inspections to make sure that the project is going where it's supposed to go and that it's on time, because that's all money, and the only thing we're looking for is to do whatever we can to make somebody succeed, have them be successful.
Right. And as far as traditional banks go, I mean, they can take as long as a couple of months to approve a loan, and by then, forget it. In this business, if someone's looking to get a property to flip, it just won't happen.
No.
It really has to be a matter of days.
Absolutely.
And it's a good bet that your banker hasn't flipped houses and dealt with contractors. Their hands just
true.
are not dirty enough.
And that's
right.
and that's the thing that I've discussed in other shows, that when you're a real estate investor as opposed to in the traditional side of real estate, they're completely different. Your mindset is completely
Absolutely.
different. The strategies are completely different. So when you're transitioning into that, you have to realize all of the different steps, the strategies, the different opportunities that are out there. So you have to take that into, be mindful of that.
Yeah, I always felt that banks were always there to say no, and we're there to see possibilities and see
Right.
opportunities and to see, wow, if you do this, you've got a project, a building that's worth a whole lot more than what the bank thinks it's going to be worth. So we're into building opportunities with people and trying to be optimistic.
And keep an open mind.
Keep an open mind, yeah.
Absolutely. I totally agree. And here's another question. What should either myself or a viewer that is going into the business, what do they look for in a lender?
Well, we feel it's important for a borrower to look for a lender that can be a part of their team, that can complement their background, experience, their expertise. So as we've been saying through this interview, we do have experience with property, with real estate investing. We have decades of experience buying and holding, landlording, renovating, and we've been flipping as well. So we can look at the deal and we can discuss with the borrower really what is the best exit strategy for this, given their life goals and where they want to be down the road. Given the cost of the property and the cost of the rehab, what is the best exit strategy? We can lend another set of eyes to the contractor's estimate and let them know if, in our opinion, based on our experience, and at this point we've seen a lot of contractor estimates, is this an estimate that looks like it's within reason, within expectation?
I think borrowers really are shortchanging themselves because, a lot of times all they're looking for you is you're the bank, okay? And what they don't realize is that there are all these skills that lenders have that if you have the right lender, he or she is willing to share those skills, whether it's market analysis, whether it's construction, whether it's permits and zoning, even more sophisticated finance kind of activities. And if you're out there seeking to borrow money, it's not just a matter of you're getting it at the lowest price or getting it really quick. You need, to succeed, there's all kinds of things that can go right and all kinds of things that go wrong. And what you really need to do is to take advantage of the lender's knowledge, skills, and experience, because that adds value way beyond just the money. That's what I think they should look for.
And in addition to helping with market analysis, a lender can provide a set of eyes throughout the course of the project. I think a borrower should look at a lender as someone to be with them through the project, to be part of the team, as opposed to someone to simply lend money at the beginning and they get paid back at the end. So, for example, at different points of the project, we'll do an inspection and we'll be able to provide feedback if things look like they're being done in the correct kind of way.
Yeah, we've actually gone so far, and this is sort of an outrageous statement to make, of being in a project and seeing, once you open up the walls and you start looking at the bones of a building, we've said to people, wow, this is a little bit more than all of us initially thought. Perhaps we should budget more money than you originally proposed. And I think that's unusual, but succeeding requires that, I mean, to constrict somebody with a budget that was determined without the full knowledge of what a building's about, it's kind of cruel. So, the budgets the loans sometimes have to be rolling so that you have the resources there to really make the building correct.
Absolutely. It opens on both sides in a sense. You as being the borrower, showing that you have expertise, not with just that individual that you're working with, but it's also word of mouth, because if other people see that you're really good at what you do and you're showing your knowledge, those people will come to you as well, and it opens up the business, and that's in that sense. Mm-hmm. And then on the flip side, you also have the person that is with the project. They learn from that as well, and and then they'll include you in more projects that are going on.
Well, that brings up the other question, not what borrowers should look for from a lender, but what are lenders looking for from a borrower. And when we think about that, we're really thinking, when somebody does a project, they can't know everything. Nobody knows everything, particularly if you're new. Yes. But what we're looking for is someone who's done all the due diligence necessary to lower risk as much as possible and heighten the probability that their project's going to be a success. So we're looking for people to do a real deep understanding of the market, the construction, have detailed plans, have vetted all of these facts as much as possible. We're looking for somebody if they don't have the skills, they can supplement those skills with architects, engineers, and construction skills, because nobody knows everything, and particularly at the very beginning. So when we're looking at a borrower, we're looking for information. We're looking for people to be as complete as possible. For example, the application on 123lending.net, that they fill out as much as possible. Give us a real understanding of, what are the comps? What have you done before? What's the plan for construction? What are the zoning issues involved? What's your exit strategy? What do you think? And the more complete somebody does, the more they give us the belief. We just completed a loan yesterday with somebody who was a complete newbie, and we, as well as an attorney that we work with, independently, we thought, wow, this woman just had everything figured out. She'd never put a nail in a board in her life or had anybody do it. But when you saw how she completed the paperwork and when you started asking the detailed questions, you just knew she really had thought this through, and that gave us great confidence to lend her money, even though she had never done this in her lifetime.
She was very thorough in her information, but then beyond that, when we would make a suggestion or the real estate attorney make a suggestion, she would follow through like clockwork. So it was clear that she was going to simply, move forward in the correct kind of way. As far as comps are concerned, but that's the most important part of our piece of information. We need to know what the collateral is, and we ask just to as a kind of primer for people who may be new to the business, we ask for 3 comps. It's important for the comps to be within close proximity to the target property. So in the city, that may be a quarter mile. Outside the city, it could be a half mile or perhaps a mile. We want to look at properties that have recently sold, not those that are on the market. And by proximity, too, I'd like to see the same zip code. In the city, that's important for neighborhoods. Outside of the city, it's important for the school district. And then we like to see a similar configuration. If the rehab is going to involve adding a bedroom or adding a bathroom, then look at that in terms of your comps. Match the bathrooms and bedrooms for what the finished product will be. Match the square footage. I've gotten comps for 900 square foot homes, and the comps were 2,000 square feet. Well, that's not really a comp. And at the end of the day, I look at price per square foot. So that's what we look for in the comps.
We're looking for real accuracy, because ultimately what we think about a property and what the borrower or rehabber thinks about the property really doesn't matter. What really matters is this going to sell at the end, and is it going to sell for the kind of money that's going to pay back a loan and make money for the rehabber? So when we say we want somebody to be accurate and complete, we're requesting that on their behalf, as the borrower, as the rehabber, just so we know as best as we possibly can that this is going to be a successful project for them.
And then, as Michael said before, we're looking for plans. What do they plan to do with it? Do they have architect drawings? What contractor are they using? And to be a little bit more specific, have they used the contractor before? If not, have they vetted the contractor? And the contractor, we all know, can make or break the project big time.
Exactly.
So it's so important, even to start out Googling online, you can learn a lot about someone. And then beyond that, get 3 recommendations. Call the recommendations. You can keep the question simple. It could be just a 3-minute conversation, but it's just, what did you like? What didn't you like? Did they stay within the time and budget? And would you use them again? And that's it. If you talk to 3 people, and then very importantly, see that contractor's work. Ask them to visit a couple sites they're currently working on. So the more information they get about the contractor, the more confidence the borrower will have. And when they relay that to us, the more confidence we'll have as well. And then there's always, as far as the transaction, there's always paperwork. We need to see clean title. There's some legal documents, such as the mortgage and promissory note. And then very importantly, we need to see the contractor estimate on contractor letterhead, and we ask for it to be divided into draws, so that we're always at a 65% loan to value.
But what we're really looking for in sum is we are looking for a borrower to undertake any activity that lowers the risk for them.
Right.
So the more information they can give us about every phase of the project, the more accurate that they can be about it, the more confidence we have that this is a good deal. If it's not a good deal for them, it's not a good deal for us. You know, we're not satisfied to get loan payments and see somebody on the back end not making money. There's just no point.
Right.
We're all going to make mistakes. Everybody does. Sometimes it's just, that's the way fortune
But you
comes
don't
down.
want it to be a very costly mistake,
Well, and-
which is,
and you don't
especially
want
if it's the first time that
yeah,
you're
no,
doing
no.
this, you don't want to have
Exactly.
that.
And you don't want
you
it
have
to
be
be a
cautious.
mistake that you could have avoided with diligence
Exactly.
and care.
Exactly. I think that overall, when you're first starting out, there's anxiety, and there's also you're enthusiastic to get started with the process,
Right.
but they neglect to see all of the components that come into it. Numbers is very crucial when it comes to investing in a particular property, and the exit strategy as well. If you're looking to fix and flip it, that's another component. You have to look at the contractors, which
Exactly.
contractors are good, which ones are honest in giving an estimate, and things of that nature. So there's a lot of components that go behind that, and you have to really do your research, because at the end of the day, you're borrowing that money from someone else, and the risk factor is not you losing the money, but you're losing someone else's money. So you have to come in prepared, knowing what you're doing, and have
Right.
a great executed plan.
Well, that's what puts us at a advantage from the rehabber, because we're looking from the outside in, and we can look at the full picture and we can help provide input. But what we're really looking for at the end of the day is a win-win situation. If it's, and again, as Michael said, if it's a success for the borrower, it's a success for us. If they lose, then we lose too.
Absolutely. No, and I totally agree. I think it's a relationship. It's a communication factor as well.
Exactly.
You have to, even if you're new to this, always reach out to the other person that knows and is familiar, because then the likelihood of making those severe mistakes are limited.
Absolutely.
Yeah.
Oh yeah. There's not a day goes by that I don't learn something. All right, and we've been at this for a while.
Yes.
There's not a day that goes by I don't learn something. So if you're new to this, or if you've been at this for 5 years, don't be daunted. You're going to continue to learn. Take all the classes, talk to all the people that you possibly can.
Absolutely. Well, each case is different.
Exactly.
So if you think that you're going to replicate the same scenario for another case that you're dealing with, that's not going to be the case. You always have
Absolutely.
to walk in knowing that this is a different scenario, and always have that in mind. So
And that's why you have to take advantage of your lender.
absolutely.
That's exactly why you have to take advantage of your
Right.
lender.
And
That's-
everybody else on the team
And everybody
too.
else you know. Yeah.
Absolutely.
Yeah.
Well, a team is a crucial part. It's almost like having a family and talking and having
Exactly.
everything in place. So having that team and knowing that each person is going to put in their part of that, everybody will come out winning. I have another question. Why is the credit history important in this situation?
Sure. I was going to actually mention too that's one of the things that we look at in the borrower is the credit history. And when I say credit history, I don't mean credit score. I'm talking about a credit report. The single number in someone's credit score is really of no value to us. Everyone has had bumps in the road.
Yes.
Everybody may have experienced financial hard times, either due to divorce or death in the family or illness or job loss, and that can create a not so great credit score. So what we look at is credit report, which shows the pattern of payments to different creditors, and that's what we look at, is a pattern of payments. And if we do look to see if there's a history of foreclosure or bankruptcy, but most importantly is transparency. So when a borrower comes to us, if they know they've had a hard time a couple years ago, and we're going to see it in their credit report, the best thing they can do is tell us about it. Just tell us what happened. Chances are it's in the rearview mirror. It's not an issue anymore. And everyone can move on.
Yeah, this is one of those things that we learned from our note experience, and that is people who are flipping houses are risk takers by definition. And when you have risk in your life, sometimes you have loss or you have difficulty. We understand that. And what's important is to be transparent, explain where your problems came from and what you did to resolve them. But there are a lot of other things people can do if credit appears to be an issue. First of all, don't be defensive about it, okay? Second of all, you can lower your risk by getting partners. Get a partner who has better credit or is able to give some sort of assurance that the loan's going to get paid out. You can collateralize other properties or other assets that you have, which might be sitting there unused, and you can pledge them against the loan. And I'm not suggesting that's what we seek, but what we are saying is that there are solutions to credit issues, and it shouldn't be, let your lender say no. Don't say no by yourself.
Right.
Don't say no on your lender's behalf.
Although we cannot collateralize a personal home.
No, not a personal home.
We don't have the license or legal ability to do that, but we can always collateralize a business property that someone has that they're renting. But the bottom line is the collateral is the most important piece of the equation, but we'd like to know who we're working with to give us the confidence that they will be following through with what's needed financially. And it's simply, again, to assure that it's a win-win situation. We do not loan to own. It's not our business model. We have no intention, no desire to take back the property. And based on that, we just want to see the financial history of the individual that we're working
Yeah,
with.
and I'll even go so far as to say that we've done loans with people who have declared bankruptcy. Okay, most people out there, when they don't really understand what bankruptcy means, they shy away immediately. But for us, it can be a financial tool that somebody uses to reestablish where they're going in life. And if the asset is correct and the project is correct, and it looks like there's really going to be value added by doing this project, bankruptcy and credit are secondary issues. All right? There's always a solution for these kinds of things.
Absolutely. No, I totally agree. And it also opens the door a little bit with the clientele, with the clients that you work with, because most of the time people shy away from people that have the financial issues. And I think that we all have had at some point in time. So you just have to be honest, and again, it's a communication factor. You just have to let people know up front what you're doing and how you're going to go about taking the next step into going into that.
I think you've hit on it. It's communication.
Right.
Yes.
And it's another example where we can and try to be flexible as private lenders.
Yeah.
Absolutely. So I have another question here. Is it better for the borrower to use their own money than to pay for the money?
Okay.
That's
That's
an
a good
interesting question.
because it is a big decision
Yes.
to use borrowed money. It means paying for the money that you're using for rehabbing. But we see a lot of benefits to using borrowed money. One is that if someone is using all of their own funds, they may be able to do only one project at a time. There's a limit. And they may need to wait until they sell that home, find a buyer, and then the buyer finds financing that adds another 2 to 3 months in the back end, and their money is sitting in the property. If they use borrowed money or private money, they may be able to leverage their own funds to do 2 homes at a time. So they're able to stagger them at the least. They're not sitting doing nothing during that 3 months they're trying to sell and get the home financed for the buyer. Another benefit is that they may be able to do a larger project than they would be able to do with their own funds. And thirdly, they may be able to keep some of their own funds liquid so that if a good deal comes along, they can jump on it immediately. They don't have to wait the few days even for someone like us. They can at least jump on it to put a deposit down on it. If they're using all of their funds for the project, they may just be, too dry to have anything liquid to jump on an opportunity, and another opportunity could just run away from them.
Yeah, basic finance says you want to use the lowest cost capital you can, which would mean your own money. But you give up all these other opportunities. You give up the ability to pump more cash into a project. So you have to. It's a balance, and people have to make a decision of where they want to go with other people's money, with leveraged, borrowed money. You can even out your cash flow because you're not working one project at a time, and I think that's comforting, particularly people in the flip world. I think from my point of view, the razor on this thing is you want to have reserves or access to funds that let you take a great opportunity. One thing that people really should think about is, even if you're not lending, borrowing at the moment, think about establishing a relationship even before you have an opportunity. Go to a couple lenders, tell them who you are, tell them the kind of stuff you do, share your financials, share your past projects, because when that opportunity might show up one day when you walk out the door, on a project you're already working on 3 doors down. Somebody might have something for you. So get all the barriers out of the way to begin with. Go meet people, tell them what you're about, and then when the project comes in, all that background work is already done. So
We often pre-approve people so that when they do find that opportunity, it's just a matter of looking at the collateral, and it's just so easy at that point. It takes no time at all.
Absolutely. Well, you don't want, again, it's not limiting yourself to just one specific thing.
Exactly.
You want to be more broad than that. So guys, I'm going to be wrapping up here.
Okay.
I want to ask you a few questions.
Sure.
One is, where can everybody find you so that they can contact you?
Great question. Our website is 123lending.net. That's just simply number 1, number 2, number 3, lending.net, no spaces. And feel free to give us a call at 215-794-2665. Again, the number is 215-794-2665 or 123lending.net.
Amazing. So, Karen and Mike, thank you for being on the show.
Thank you for
Thank
asking
you
We'll
for having
definitely
us.
have you back, have a more
That would be
in-depth
terrific.
conversation. This is very fascinating, very, very interesting for those people out there in the real estate sector. So, guys, until the next time, this is the Work Your Money Podcast. Bye.
Thank you. Bye-bye.